Welcome back. It's time for our video from Unit 11. It looks like we may just get one video out of this. It's going to be a little different than the other units in that my first attempts at creation for PowerPoint were to include some of these reports, and I quickly found out that they don't come across very visual. So we're going to opt to go to Plan B on this unit, wherein I have found a select number of videos that I think are easily accessible on YouTube, and I'm going to reference one of those for each of the three particular sections. So let me get you out to the PowerPoint. We'll click all the way through. Even when it specifically says, let's go ahead and look at the video, I'm going to let it for you to do at your leisure, and you may then follow through. So here comes our PowerPoint lesson for Unit 11. If you want to find this textbook information, it's in Chapter 13 in your book. And we're going to talk about the specific financial reports affiliated with businesses. So you got to figure, okay, well, it's something that would have some merit to us, being able to look at a financial statement and figure out if good things are happening to the company or bad things are happening to the company. Certainly, it's important to the company in terms of being able to attract investors. So it's a three-section tack. We got balance sheets in on 13.1. We got income statements on 13.2. And then we'll end the unit with a look at trend and ratio analysis. Think of that as a comparison of one particular year or one particular month, maybe to another year or to another month. How do things look on a comparison basis with those ratios? All right, so this is your dear old instructor saying, I tried really hard. I downloaded some good stuff, and I think, all right, well, I'll put that into a PowerPoint. We'll take a look at it, but it was extremely difficult. I couldn't get a large enough thing that made it practical to see. So I'm going to punt rather than me attempting to put those balance sheets in here and then highlight things relative to them. We're going to kick out to a video that you can easily find on YouTube. I've tried very hard to make all three of them manageable in length, so you're not going to have to sit there for an hour and a half for each of the videos. You'll get good content and a crisp delivery. All right, so that's the plan. All right, so what we'll get is in this PowerPoint, I'll show links. I'll hyperlink to each of the videos. But in the summary sheet for Unit 11, I'll put information that you can click that takes you directly to that video. So while you can certainly find them in this PowerPoint, I'm of the opinion that when the PowerPoint gets converted to PDF, yeah, you'll be able to see the link, but it's not quite as cool as just being able to click on it and YouTube fires on your laptop and the video starts to play. So I will include the embedded videos in the summary sheet for Unit 12 for Unit 11, and that should make it easier for you to access them. All right, there, as previously in previous units, you've got your objectives for the thing. We're going to be able to look at and compare a lot of numbers relative to how well the business is performing relative to our profits, comparison of an expense here versus an expense there. So again, I won't read them to you, but they're there, and they will also be detailed for you in the summary sheet for Unit 11. So first section is 13.1. We're going to talk about balance sheets and their report as of a particular date. All right, so it gives us a snapshot how we're doing on that particular window of time. Again, I'm not sure that you're going to take this class before or in exclusion of some accounting classes that'll be part of your program, but your basic accounting equation probably recognized from previous opportunities that assets is equal to liabilities plus owner's equity. A lot of books, a lot of times you'll hear equity referred to as capital. It's the money invested by the powers that be who own the company or the stockholders that are invested in the company. So there's your basic equation. All right, well, let's break it down a bit more, shall we? The assets are the things that are of value, things that we could convert to a cash value or a monetary value, either by selling or they may in fact be part of the asset may be cash. Liabilities are obligations, debts of the company. We'll break that into two separate categories. Current liabilities are things that are due within 1 year. Things that are due longer, we'll classify as having to be paid within long term, don't have to be paid within that 1 year. They may be payable over a longer span of time. The equity, as previously mentioned, mentions the interest or the rights of the person who own or the owners of the company. And you'll find in the textbook on 350 to 352, your author does a really good job breaking these categories into subcategories. And I would encourage you to open that book, grab a snack, and take a look at what specific breakdowns there are relative to assets, relative to liabilities, and relative to equity. All right, this takes us to your first video opportunity. As I said, it's hyperlinked here in the PowerPoint, but most of my videos are when I send it into the unit, they're going in as PDFs. So it may not be able to be clicked on and shot straight out. So the summary sheet will have the embedded video for you. But there you go. We're going to take this guy for balance sheets. And I'm going to continue this video and presume that you will look at this at your leisure. All right. Section 13.2 shifts the focus away from balance sheets to income statements, and that's a report of that particular income facet over a specific period of time. Might be a month, might be a year. All right, so what we're going to do is we're going to compare money coming in to money going out. And for you and I as a business entity to have some kind of a profit situation, we hope that we have more money coming in than we have going out. So we will have an income or we'll have a profit if our revenue exceeds our expenses. So if the money coming in is greater than the money going out, welcome to us having some kind of a profit action. All right, so revenue compared to outward flow, so money in versus money out. Again, you can take the time to read this slide. I can read some things for you. All right, well, we'll talk about revenues, the total earned from sales, cash and credit, cost of merchandise sold. You can think of how much did it cost us to make that. And again, we're hoping that the money come in is exceeding the cost that it took to make those goods. And if that's the case, then we will have a gross profit from our sales. We may have operating expenses, you certainly do, that don't have to do with the creation or the manufacture of your goods, salaries for your workers, insurance for your properties and such. I always include Wi-Fi because you got to have that for your customers to come visit. So we'll talk about net income basically being the profit taking away those operating expenses. And if we do a good job, we will in fact have a net income. That takes us to video 2. And again, I try to find something that is clear, crisp, and concise, and I pay attention to how the person's voice sounds. So we are going to continue this PowerPoint into this video. And again, I will invite you to check this one out at your leisure, and you'll be able to learn about balance statements, or I'm sorry, about income statements. All right, last action on section 13.3 talks about trend and ratio analysis. So you're comparing a snapshot here. How did we do this month compared to last month? This year compared to last year? And there are a myriad of particular ratios that you can create. And again, if you refer to your author's text, you'll find them on 362. And I've just tried to list them into the PowerPoint. And unfortunately, the print got a little small for you to read all of them. But when you actually check out the video, he will make some descriptives about which of these maybe are easier or more meaningful. But your author does list a pretty good amount of analysis ratios that you can create. That takes us to our third and final video for us to consider. And again, it's hyperlinked here in the PowerPoint, but the PowerPoint probably will be converted to PDF as submission for the Moodle portion of this unit, but it will be included as an embedded video in the summary sheet for unit number 11. So again, grab your popcorn, your Diet Coke, and watch this one that talks about ratio analysis. And that's going to take us to a place to wrap up Unit 11 now that you've seen some videos that talk about all of those things. In my research for Unit 11, there is a ton available in terms of being able to look at the individual capacities and components of balance sheets, financial statements, and the notions of ratios for us to consider. And I didn't even list anything from Khan Academy, but as it relates to math, that's generally a really good jump point. So you can find some things that you will be able to do and read and learn about. So I'm not too worried about the fact that my PowerPoint doesn't have cool video slides for you to follow. It was a really good attempt. It just didn't come out very well. So I just deferred to being able to find things that are easier to detail on the videos that you've been invited to look at as a part of this PowerPoint presentation. So wrapping down Unit 11, you'll notice that there are very few problems from the book from this one. You'll find them on 367. Crank out some solutions, send them my way. If you run into questions and difficulties, shoot out an email, and we'll try to find some time to meet together to get you over hurdles. And we will be back soon with the videos for Unit 12, which will be our last content unit, and that'll set us up for the end of this course and a final as we move forward. We'll see you soon for Unit 12.